Welcome to Kickin' with the Rickens, redefining retirement. Gerry Ricken and Heidi Ricken Provost want to help you retire with purpose and live with joy. Find more information, including how to reach the team, in today's show notes. Now, Kickin' with the Rickens, powered by Ricken Financial.
Thanks for subscribing. Thanks for downloading. Thanks for listening to Kick In with the Rickens podcast. We are here with licensed insurance professional Gerry Ricken. My name is Mark Owens. We invite you to get more at rickenfinancial.com. You can get all the information here in the show notes. Thanks again for subscribing. Now, let's get to the show. Gerry, how you doing this weekend?
Doing great, Mark. How about you, buddy?
Man, I've got no complaints. We were talking a little bit off the air before we got started. And one of the goals, I want to say like one of the mission statements here for Kicking with the Rickens is to help, adults feel fulfilled, fulfill financially, fulfilled mentally, but also that spiritual fulfillment as well. And I know that's something you talk it, you walk it. You're very active in your church and in your community. What were you up to this week?
Well, I grew up in a very small German Catholic community in South Central Kansas, and now I live in a very small but larger German Catholic community in St. Louis, Missouri. So we were born into the Catholic faith, and as practicing Catholics, we wanted to do something several years ago. One of my cousin's sons was studying at Kenrick Seminary here in St. Louis to become a priest, and I said, okay, these kids who are not from St. Louis don't have a place to go for the weekend. They live in the dorms, but they don't have a home environment to go to. So Sheila and I said, let's design a little program for these guys that are from out of town. And we said, let's do a bourbon, burgers, and beer night for the seminarians. And they love it because we did that once a semester. So every semester they would come to our house and just hang out in a comfortable environment and just have some fun. And it caught on, and we've been doing that for the last 16 years. And each year, we are blessed to be invited for those who are becoming priests to their ordinations. And over the years, we've been able to go to a few if it worked out in our schedule. And it's been an incredible experience to do this with these guys. And, you just think that when you think about your pastor, your priest, you kind of put these guys up on a pedestal. They're just human beings like the rest of us. And they love to just socialize and have a good time, but they're also very faithful. And we were blessed, Sheila and I were blessed to go down to Wichita this last weekend and see deacons, Peter, Kobe, Kyle, and Luke, become Father Peter, Father Kobe, Father Kyle, and Father Luke. So there were 6 members of the Wichita Diocese, 6 deacons who became priests this last weekend. But these 4 in particular studied at Kenrick. The others studied elsewhere. And it's just been so much fun to see all of these priests come through Kenrick Seminary and coming in as pretty green and then, flourishing into priests over the years of their study. So it's been a lot of fun. And it was particularly fun for us because we saw 4 of them, become ordained on last Saturday. And then we get invited to their first masses and to their parties and those kinds of things. So one of the parties was thrown by Father Kobe and Father Luke. And they had a holy happy hour, which was an interesting concept because they did it in the chapel of their Catholic high school. And that's where the holy hour was. So it was perpetual adoration. And they were hearing confessions for people, and there was incense. There was, some prayers going on and some hymns being sung. So we did that for an hour, and then after that, we had the happy hour. So the celebration of, they've made it into their priestly, being now. So it was just a lot of fun, and it was very, spiritual, but also fun at the same time. So, and then on Sunday we were blessed to be invited to all 4 of their first masses. When you become a priest on the Sunday after your ordination, you have your first mass. So you say the Eucharistic prayer and say the mass, and you're the celebrant, and then all the other priests are there con-celebrating with you. But we didn't make it to all 4 because 2 of them are at the same time, and I know that you can't be at the same place, right, or 2 places at the same time. So we were blessed to have one at 1 o'clock, one at 3 o'clock, and one at 4:30. So by the time we were done at about 6:15. I had the the gospel memorized.
Right.
I had the readings memorized. I had everything memorized. I knew the mass backwards and forwards for the Pentecost Sunday. So that was but it was a lot of fun, and it was a blessing to be there, and we were just happy to be there, and we're happy to celebrate our faith with individuals like that who are committing their lives to God.
After mass, after mass, after mass, your spiritual tank was pretty full at the end of that day.
It certainly was.
And by the way, you say holy happy hour. I feel like there's something wrong. Like, I feel like that's a bad thing, but that is fantastic. Good on you.
Well, I mean, it's living life.
Yes,
you
right.
know, and just like I said, they are just like the rest of us.
Amen. And I know we've talked about it before, the fish fry that you do, and y'all are super active in your community and the church as well. So good on y'all for helping these new members of the church, and I'm glad y'all got involved with that. We invite you to spend some time online at rickenfinancial.com. See everything that they're involved about in the community. They love being part of St. Louis and the surrounding area and being involved in church and charities and so much more. And again, get more at rickenfinancial.com. And we're talking about being fulfilled. And sometimes you feel like after you've written that check to the IRS, you've done your part. You've fulfilled your duty to pay your taxes. But Gerry Ricken, not so fast, because taxes are something that isn't just once a year in April. It's something you think about all year long, and it's also something that's not going to go away just when we retire.
No, it isn't. And you heard the intro of the show if you tuned in early on. Heidi said, if we can reduce some of your stressors in your retirement life, that's what we're all about. And one of the stressors that people have is taxation, because if you don't plan properly for it, it can take a huge bite out of your retirement lives. And when I say plan properly for it, that's really taking a look at tax strategies and tax planning and tax diversification. What can you do for the rest of your life to reduce taxes? Because guess what? Taxes will be the biggest expense in your lifetime. Let's just face it, they will. When you run the numbers, it's staggering how much people will pay in tax if they just let things ride the way they've always ridden. And it's also staggering to see how much money you can save by putting the proper strategies in place, because you can potentially, depending upon your situation, you can potentially save millions of dollars in your lifetime in taxation. And yes, that is a true number, because we've run the numbers, and we've, obviously when you do projections, all of our numbers are going to be wrong. We know that, but we're very close on what we can do, because anytime you do a projection, you have assumptions, but we try to make our assumptions as conservative as possible, because we want to make sure that we can test our plans and they will hold up in the event that things go, they're a little bit different. So we believe that with proper tax planning strategies, objectives, diversification, that you can reduce and potentially eliminate taxes eventually in retirement. And when people say that, they hear us say that, well, you can't cut out taxes completely. No, it is a process. Yeah. It is a process. It is a plan. You have to have a retirement plan. And if your advisor is not talking to you about taxes, you're missing the biggest piece that you can effectuate in your retirement lives to make sure that you are taking advantage of what's out there. And when I say taking advantage of what's out there, the Internal Revenue Code is written as a favorable document to taxpayers. A lot of people don't understand that. They think taxes are this burden that you can't get away from. The Internal Revenue Code is written such that if you know where to look and how to use it, it can be a very effective tool. And that's the only way you can do tax strategies effectively, is by using what is in the Internal Revenue Code. So when you think about tax strategies and tax planning, if you just let things go, you are probably missing out on a huge opportunity. And, we had one of the biggest tax law changes signed into law last July 4th. And with the One Big Beautiful Bill Act, there are so many things in there that are opportunities for planning, for preparing, for reducing your taxes in the future, that people just don't understand what's out there. So Heidi and I have spent our entire careers focusing on taxation. I'm a recovering accountant. I was in the public accounting world for 5 years to start my career, and I call myself a recovering accountant because I don't do that anymore, but I've taken the tax situation, all the tax law that I've learned about, and implemented that into our retirement planning practice. And And Heidi's done the same thing. I mean, she grew up as a tax preparer, because in order to really understand taxes initially, you have to prepare them. So preparation is still part of one of the services that we provide, but we know exactly what's going to be on that return before we prepare it, because we've planned for it. So that's really what we're talking about when we talk about tax strategies and tax diversification, is knowing where to look, what to do, and how to design your tax world.
Having a good conversation about the power of tax mitigation to and through retirement. It's not just a conversation we have in April. It's all year round. And Gerry, you see the stories and the clickbait and the commercials that say, give me a call or reach out to me. I will give you a tax-free retirement. I'll build you a plan so you don't pay the IRS anything in retirement. Gerry, I see that and I think, I don't know. So break it down for me. Can you build me a strategy that includes a tax-free retirement?
It all depends. And that's why you should never listen to clickbait. You should never listen to blanket advice, because everyone out there has a different world in their financial situation.
Right.
I mean, everyone's different. Everyone's different, just like your fingerprint. Take a look at your finger. Your fingerprint's different than everyone else's. Now, can you? It all depends. Have we? Yes, we have design plans that are designed to be tax-free in retirement, as long as people follow those, and as long as the IRS doesn't change the rules or Congress doesn't change the rules, or if they do, we'll have to just go back in and change our plan. Yes, you can, but it depends. That isn't a blanket statement that everyone can. It all really depends upon what your tax world looks like and what it can look like. When we take a look at tax planning and tax diversification, tax strategies for retirement, we all know, or you should know out there by now, that the largest expense in your lifetime is going to be taxation.
Yeah.
It just is. And why not take a look? And that's the most overlooked in retirement planning, unless you work with a firm like ours who focuses on tax strategies. I have a lot of friends who are in this industry and they work for other firms, big box firms. They're forbidden from talking about taxes. We talk about taxes every day because we aren't forbidden. We aren't restricted. We believe that if you don't talk about taxes, you're missing out on the biggest planning opportunity in your retirement lives that you should be focusing on, because you can reduce taxes in retirement if you plan properly and if you put the right strategies in place. When we think about tax diversification is what we talk about. And tax diversification, a lot of people haven't even heard the term tax diversification, because when they think about retirement planning or investment planning or financial planning or retirement, anything about, they're planning their finances, they think about diversification in market risk. Mm-hmm. Well, that is extremely important. We also focus on that, and we want to make sure that you are investing based on your risk tolerance. So that's what really diversification is all about, making sure that you are meeting your risk tolerance in your investment opportunities from a market risk perspective. But that's not what we're talking about here. We're talking about tax diversification. What can you do to mitigate taxes, to lower taxes, to potentially eliminate taxes on certain investments, and perhaps in your retirement life, as you mentioned earlier? And when you look at that, you really need to focus on what makes sense for you and your family. If you're a married couple, what makes sense for the two of you? What happens if you lose a spouse? What happens to your taxes then? What if you're a single person? What if you're, and you've never been married? What if you're divorced and you have dependents or beneficiaries that you'd like to pass some money on to? Well, first and foremost, we want to make sure that you're taken care of in retirement, and that your retirement life is structured so that you never have the stressors of running out of income in retirement. We want to make sure that is the biggest opportunity out there for us, is to make sure that does not happen. We want you to have income as long as you have blood pressure. Right. So that's, as long as you're here with us, we want you to have income, and the appropriate amount of income to really satisfy your wants and needs. And and so that you can live a joyful retirement. That's what our overall objective is. And one of the ways you can do that is by lowering your income taxes in retirement. And how do you do that? It isn't just cutting out income taxes, saying, I'm not going to pay the IRS. That isn't what we do. That's not what we're talking about at all. We're talking about using the Internal Revenue Code to design your tax life to lower your taxes eventually in retirement. It's a matter of when you pay, how much you pay, and what kind of investments you're using to not maybe throw off as much tax as other kinds of investments. So it's a matter of when and how much you pay. It isn't a matter of not paying at all, because yes, we do have to pay taxes, and maybe it's structuring it so that you pay some this year, some next year, some next year, some next year, and then you're able to lower those taxes eventually in retirement. One of the biggest things that people don't understand is what will happen when they reach a certain age and the Internal Revenue Code, the IRS, says you need to pay us some taxes because you need to take something called a required minimum distribution out of your IRA or 401k. Well, what is a required minimum distribution? A required minimum distribution is an amount of money you need to take out of your retirement funds that you haven't paid tax on yet. And that's not talking about Roth. I'm talking about traditional IRAs and 401ks. And most of us have big balances in those. At least the people that we meet with have large balances in those, because that was the opportunity that we had early on with our employer. They said, hey, you're not going to pay tax on this. You put the money in here. And eventually when you retire, you'll pay less in taxes in retirement than you are now. Well, guess what? No, that's a misnomer.
Right.
We're going to pay a lot more in taxes because we're going to pay taxes on all that growth, all that deferred growth over the years and years and years of compounding tax deferred inside this account. All of a sudden, every penny that comes out of that now will be taxable. And the Internal Revenue Code, Internal Revenue Service says, here's what you're going to do. You're going to pay based on our life expectancy table. We don't get to dictate how much we take out. The IRS dictates how much we take out of these accounts. Based on your life expectancy table that we've designed, here's how much you're going to take out and pay tax on each and every year for the rest of your life when you turn either age 73 or age 75. Why are there two different ages? Well, because age 73 is designed for those people who were born before 1960. And age 75 is the time and table in which you need to take required minimum distributions out of your account when you were born 1960 or later.
Yeah.
So you get a couple more years if you're born in the 60s or later to really plan for that tax freight train that's coming at you. Because when I say a tax freight train is coming at you, we have seen plans that we worked with individuals and seen their portfolios, and without any planning, they will be paying more in tax and have more income, taxable income in retirement than they ever had in their working years because of what's happening with their portfolios. So because they haven't paid tax on this before, all of a sudden they've had some great runs up in the market.
Yeah.
And guess what? Each and every year you pay those required minimum distributions, the percentage goes up year after year after year. And if you'd like to learn more about that, please call us at 314-207-6211. We would love to have that discussion with you, because if you don't understand what you're going to be facing, how can you even plan for it? What do you even know about that? And how much is it? And, we do our projections. We try as much as we can to replicate what's going to happen in the future. But anytime you do an assumption, everyone knows anytime you do an assumption, the numbers are wrong, but they're reasonable. So we want to make sure that you understand what's facing you, because a lot of people don't understand that there's a light at the end of the tunnel, and it isn't, the other end of the tunnel. It's a freight train coming right at you with its light on, and that's called taxation. And taxation in retirement can be devastating to your portfolio. If you had the opportunity to save taxes in the future, would you? You just need to ask yourself that question.
Yeah.
Well, I think if you say no, we need to check you for a pulse because I think most of us would like to save in taxes if we can. And how do you do that? Well, you just need to put the proper strategies in place to understand, first of all, where you are now and where you can be with different strategies involved.
Somebody's listening this weekend and they're going, but, Gerry, you make a great point. I need to work on my tax strategy. I need to work on mitigating taxes a little bit, but I'm so far behind the 8 ball. I'm maybe about a year out from retirement. Maybe I just retired and I realized I'm still paying too much in taxes. Is it too late to get started completely revamping or restructuring my entire tax portfolio, even though I'm already retired or I'm right about on the cusp of retirement?
We believe that the earlier you start, the better off you are, because the more years you have before that 75, or even if you're 75 or older, it's never too late to start. Without knowing what's available to you, you're missing out. We talk about the fear of missing out a lot. FOMO is a big term out there. The fear of missing out. Well, there's a fear of missing out of reducing your taxes in retirement, regardless if you're 45 or 75, or 35 or 85. Yeah. 85 that ship may have sailed for you, but the point is, it's never too late or too early to start planning for your financial and tax life.
And we talk about it every week here, Gerry Ricken. It's called the Purpose Approach. Plan with purpose and retire with joy. It's like your mission statement at Ricken Financial. That's that initial consultation. But I guess the question is, Gerry, what is the Purpose Approach? What can you do for me, Gerry Ricken?
Well, Mark, the Purpose Approach is just our term for how we view retirement plans. The Purpose Approach is the retirement plan you end up with after you work with Ricken Financial. And why is it called the Purpose Approach? Well, it's called the Purpose Approach because we believe that one of the most important questions, and the first question we ask and discuss with you, is what is your purpose in retirement going to be? When people look at us, they say, what do you mean? Well, when you're working 35, 40 years in your working years, we believe that what you do should be feeding your soul. You have a purpose. You have an opportunity to go in and make an impact on your company. If it's your own company, if it's someone else's company, if it's your clients, your customers, whatever it is, you have a purpose in life, and you're fulfilling that purpose by going in every day and saying, here's what I'm going to do today. And I'm fulfilled. I have a purpose. I have something that feeds my soul. Well, when you retire, that 8 hours to 10 hours a day that you've been spending feeding your soul gets replaced with what? If you don't have a plan for that, then you probably shouldn't be retiring yet, because we've seen too many people not have a plan, get frustrated, get depressed, wondering what's going to happen. We also have spouses who are concerned about having their spouse come home and not having a purpose, not a plan, what's going to feed their soul in retirement. So whether that is volunteering in the community, having a part-time job, spending more time with their grandkids, doing traveling, creating a hobby, diving into something, what is going to feed your soul in retirement? So that's the first thing we talk about when we talk about the Purpose Approach, is what are you going to spend your time doing? People don't focus on that, but they need to focus on that, because the only way you really live with joy is to have a purpose and a plan and something to feed your soul every day. So why not design that so that you are enjoying, walking away from your career?
That's right.
Because we want you to enjoy that. That's why we work so hard, is so that eventually we could retire someday. Mm-hmm. In addition to that, we look at income planning. The biggest fear of most Americans is running out of money. And how do you run out of money? You run out of income. It's all about income, because as you state, Mark, you've said this 1,000 times, income is the outcome that matters most in retirement. That's right. Truly believe that. You need to have income to cover all of your needs. We also want you to have income to cover all of your wants, and what about things like extraordinary expenses, like replacing your HVAC system, replacing your roof, because we know that the insurance companies aren't replacing 100% of your roofs anymore because they have this thing called depreciation out there in your policies. What about how many cars are you going to buy in retirement? People say, well, I'm on my last car, and they're 62 years old. And I'm like, no, I don't think so. We have to plan for some car replacements. Now, eventually, we'll take the keys away from you, and we won't buy you another car in our plan. But we need to make sure that, are you right-sizing? Are you downsizing? Are you buying a different home? Are you wanting to spend more time, maybe snowbirding and getting away from the St. Louis winters and going down to Florida or Arizona. And all those things are involved in the purpose approach. In addition to that, we look at your investments. How are you investing? And more importantly, how do you want to be investing?
That's right.
What is your risk tolerance? And are you investing according to your risk tolerance? So, and a lot of people, when they come to see us, they really aren't, because they may have had a 401k and they set it, forget it years ago, and they really don't know what's happening inside that. We take a deep dive in your investment portfolio. We run independent analysis to really determine what you're investing in, how you're investing, and why you're investing the way you're investing. We always look at taxes, no matter what, and with tax diversification is what we're talking about. How can you best use the Internal Revenue Code to make sure that you are paying the least amount of taxes in your retirement life that you can? Because taxes is the biggest ticket of anyone out there. The most expensive thing you're going to do is paying the biggest expense you're going to have in your lifetime is taxation. So if we can mitigate that, if we can reduce some of those taxes, we will show you how to do that. And you make all the decisions, obviously, to see if it works for you, because it always has to work for you. Then we look at healthcare. What about Medicare? What do you need to look at when you turn 65? A lot of people think as soon as they turn 65, I have to turn on Part A of Medicare. No, you don't. If you have an HSA, guess what? You can't and you're still working past 65, you can no longer put money in your HSA account if you turn on even the free Part A of Medicare. So there are little hidden things like that we need to talk about. But more importantly, on the healthcare side, what if you need long-term care in the future? And about 7 out of 10 of us will need that. So and the other 3 out of 10 will probably be the providers for our loved ones. But what does that really mean? And people say, well, I can't afford to look. You can't afford not to look at that. When you say, what about long-term care? They immediately think about the old long-term care policies out there. And that's not what we're talking about. We're talking about designing a plan for you that says, hey, we want to be taken care of at home, or we want to go into a facility that if you need more assistance, it has progressive steps where you can enter into those different layers of long-term care, healthcare. But we want to understand what your desires are in that realm. And then we will show you, because we are in the show me state, we will show you what that really looks like and how you can, maybe you self-insure. Maybe you go on a Medicaid program, a government-sponsored program. Maybe you have enough income to cover that, and we develop that in your income plan. So it all really depends upon what you want, and then we develop that structure around it. Then we look at life insurance. Life insurance has opportunities. A lot of people have life insurance out there that has overfunded cash in it, and we could probably re-engineer those life insurance policies that you have and better effectuate the way that it's designed to really treat you in retirement, because you bought it for death benefit. Maybe there are living benefits out there. A lot of people don't understand what living benefits are in retirement. And if you don't understand what living benefits are in life insurance, you probably need to reach out to 314-207-6211 and just ask us that question, because life insurance, as we know it, has changed over the years and has gotten a lot more flexible and a lot more effective when using tools to plan for the future. Then we look at legacy planning. We look at estate planning. What do you want to leave behind, if anything? And how do you want that to be structured? So the one most important thing we can do is try to avoid probate court, so that the courts don't determine what happens with your assets. You determine that. So you're in total control. So we bundle all that together, and we call it the purpose approach.
That's right. Real quick, where can we find you, Heidi, the team at Ricken Financial? Where is the home office?
Our home office is located in Creve Coeur, Missouri, and we are between Olive Boulevard and Ladue Road, right on Ballas. If anyone knows where the Creve Coeur post office is, we're right next to the post office. And on the other side of us is a St. Louis bread company. And when I look out the window right now, I can also see DeSmet High School's football practice facility.
Oh, nice.
And if you've ever been to a doctor in St. Louis, most of them are located on Ballas Road out here, because they call it Doctor's Row for a reason. There's all kinds of specialists, down beside us, around us, and down the street. So just take a look at our website, rickenfinancial.com. look up the address. Make sure you put North New Balance when you're coming in to see us. And when you come to our parking lot, drive around the back of the building. Why do I say drive around the back of the building? Because the front of the building has about 42 steps you need to walk up. So you can just park, or drive around the back, walk straight in. You will actually see the recording studio that I'm sitting in right now. The first thing you'll see when you walk in the door, then you'll see our big logo, and just walk in. You'll be greeted, and we will take care of you.
Always thinking about your taxes. Good conversation this weekend about your tax strategy. And let's talk about the One Big Beautiful Bill. Help me understand it a little bit more. And more importantly, how can it help me in my overall tax strategy, Gerry?
One of the biggest things that it did was extended the tax brackets that we've had in place since 2018. Without that bill, we would have gone back to 2017 rates, and all of our taxes, every one of our taxes would have gone up. So it kept those in place. And what that does is that creates a tremendous opportunity for tax planning and tax strategies going forward into retirement. And Heidi and I talk a lot about taxation. We obviously are a retirement planning fund. We do money management. We do all kinds of things in retirement planning. But one of the things we focus on is tax planning, tax preparation. But tax preparation is really what happened last year. We know what is happening when we come to April 15th with our current clients because we've planned everything in advance. We've put tax strategies in place so that people understand what's going to happen in the future. And I think that is one of the things that really sets us apart is because we have tax backgrounds and we can talk taxes when we're talking about your investment portfolio. And we do talk taxes when we're talking about your investment portfolio. And if you're not doing that, you're probably missing out on a huge opportunity to reduce what is the largest expense in your lifetime, and that is taxation. So we meet with people every day and we say, okay, what's your tax life look like in your investment portfolio, and what can it look like? And can we get you lower taxation in retirement? The answer to that is yes, almost exclusively. Every time we meet with somebody, we believe that we can lower their taxes. So why not take a look at that when you're actually planning your portfolio and planning your retirement life? Because you're out purchasing something. You have an opportunity to purchase something at Costco.
Yeah.
And you go to one Costco and the gasoline price is $3.96. Well, you go to another Costco and the gasoline price is $4.03. And they're equal distance to your house. Which one are you going to go to if you want to go get gas? Yeah. So why not save where you can save? And that's what we're talking about. It's saving in taxation for the rest of your life. And if you want to just learn a little bit more about that, come see us. Call us at 314-207-6211 and just ask about, hey, is there any way I could get an appointment with Heidi or Gerry to talk about my tax life? Because that's what we're talking about. But when we talk about going back to the One Big Beautiful Bill Act, that was a tremendous opportunity because that gives us some planning opportunities, particularly in the Roth conversion world. When we talk about Roth conversions, a lot of people don't understand what a Roth conversion is. But when you have traditional funds, and most of us do have those traditional IRAs, 401ks that we've not paid any tax on, can we convert some of that to Roth? And why would we want to convert some of that to Roth? Well, because if you have money in a traditional account, an IRA, 401k, that you haven't paid tax on, all the compounded growth that happened in there, you're going to have to pay tax on every dollar going forward. Whenever you take a dollar out of that, you have to pay tax on it. A lot of people actually are going to pay more tax in retirement eventually than they were in their working years because their taxable income is going to be higher in retirement because of these traditional IRAs and 401ks they have. So to take a look at that and maybe do some Roth conversions from that, what you do is you take a portion of those accounts, you pay the tax, and you put it into a Roth account, a Roth IRA. Why would you do that? Because all the growth on a Roth IRA is tax-free. When you take any dollar out of a Roth, as long as it's been in existence for 5 years and you're over 59 and a half, every penny you take out of that is going to be tax-free in retirement. Well, would you rather have tax-free income in retirement or taxable income in retirement?
Tax-free.
I think we all know the answer to that.
Yeah.
I think we all know the answer to that. And if you said taxable, we probably need to check you for a pulse because we need to make sure that you know what's available to you. But Roth conversions is just one little small component of what we do here in tax diversification at Ricken Financial, but we can talk about all those items when you get here. But getting back to the One Big Beautiful Bill Act, if you're 65 or older between the years 25, which already happened, through 28, this is a short-lived provision, but you're going to be receiving an additional deduction of $6,000 per taxpayer or $12,000 in a joint environment. And it's based on, those eventually will phase out based upon income limits, because, nothing's ever simple when it comes to tax law.
Yeah.
But that's in addition to your itemized deductions or your standard deductions. You get an additional amount. We've seen, in one of our clients, they got $126 as that, $6,000 or $12,000 amount, but they at least got something because their income was so high that it phased out. But that's out there for you. The other thing that one of the biggest changes that they made when they put this law into place was something called SALT. And I'm not talking about what's on your kitchen table. I'm talking about state and local tax. And what state and local tax is based on that's your Missouri income tax or your Illinois income tax, wherever you're listening from. So your state income tax, as well as your personal property tax, your real estate tax. That's what it was limited to $10,000 until last year. Then it went up to $40,000. Now there's a $40,000 cap on it. Well, people say, well, I'm still really not going to hit that, because if you're over 65 as a married couple, you have about $35,500 as a standard deduction. So if you can't go above that with your itemization, then you take the standard deduction. Well, Heidi and I believe that we should be creative in our tax preparation, our tax planning. Why not do bundling? And I'm not talking about, you hear all about bundling your car and auto and bundling your phone and your internet. No, I'm talking about bundling your tax deductions. So when you talk about bundling deductions, maybe you are charitably inclined and you give a few $1,000s. Maybe you give $2,000 a year out to your church or charity every year. So if you do that, why not see if you can put those in a donor advised fund, have the donor advised fund pay over that in several years. Maybe it's 5 years. You put enough money in there to fund that $2,000 for 5 years. Well, guess what? You can now take if it's $2,000 a year and you put 5 years worth in, that's $10,000. You add that to your other tax deductions, and maybe you get more in your itemized deduction. Well, you do that 1 year, then you go back to standard deduction next year, and maybe you can flip-flop and actually get more. And why not prepay or post-pay your real estate taxes? Say they're due on December 31st. You wait till January 1st or January 2nd to pay those. You pay a very, very small amount of penalty on that, but you can have 2 in 1 year. And then you can get more itemization that year. So there are very creative ways that we can use the One Big Beautiful Bill Act in structuring your taxation. So those are just a couple of things that are out there. We talked about Roth conversions earlier on. Maybe look at Roth conversions. Maybe how you're using your HSA right now. We believe you should not use your HSA while you're working. You should save it for retirement because it's very tax advantaged. And we could talk about that when you're here. What about muni bonds? Do they have a place in your portfolio? What about tax loss harvesting? What about cost segregation? What about net unrealized appreciation? All those things are part of tax diversification as well as your traditional amounts. We don't believe you should convert 100% of your traditional to Roth. We believe that's a mistake because you're paying too much tax if you do that. So there are all kinds of things that are really specific to you. Have you done your real estate tax freeze? If you're over 62 in the state of Missouri, you have an opportunity to freeze your real estate taxes. So all those things you need to be aware of, but we haven't even touched on what could happen with respect to everything in the One Big Beautiful Bill Act. What about Trump accounts? Have you set one of those up for your grandkids? What's that really mean? Well, if we just ran the numbers, you could potentially have about $1.6 million if you funded a Trump account for a kid who was born in 25, 26, 27, or 28. And by the time they're 65, you could have tax-free $1.6 million. Would you like to learn about that?
Yes.
Would you like to learn about how you could potentially save millions of taxes in your lifetime? If you would, call it.
The power of a proper tax strategy with the help of the team at Ricken Financial. It's part of the Purpose approach. Plan with purpose, retire with joy. And if you've saved at least $500,000 or more for your retirement, for your financial future, it's no cost, no obligation to you. 314-207-6211. Again, 314-207-6211. Well, Gerry, as always, thank you. Thank you for the education. Thank you for the information this weekend. We are back next weekend. But, Gerry, before we get out of here, take us home.
Every day is a holiday. Life is short. Laugh hard.
This has been Kickin' with the Rickens, redefining retirement.
Insurance products are offered through the insurance business Ricken Financial LLC. Ricken Financial LLC is also an investment advisory practice that offers products and services through Impact Partnership Wealth LLC, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Ricken Financial LLC are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Ricken Financial LLC is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Ricken Financial LLC.
Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.
Tax preparation and tax advisory services are offered through Ricken Financial. These services are not offered by IPW and are not subject to investment advisor requirements. These services referenced are an outside business activity not offered through or supervised by IPW.